Just got out of the dentist, on the move, so got to record this video on the move, headphones in, no setting, but you know, it is what it is. So interesting action today in the market. We've got our eyes very much in tune with oil and oil stocks, yet there's another discrepancy in there. And the way I see this, we're just adding more ammo to the gun that is the oil stocks right now. They are historically low, very low priced compared to where they should be given the current price of oil. And there's no indication that that price of oil is going to go down. Before we get into the dynamics between those, let's talk about prices more broadly. Today, we got some pretty hot inflation numbers. And yesterday, we talked about the bond auction that was relatively strong. Today, we had another bond auction, but it wasn't nearly as strong because that inflation data came out. And who wants to own debt that's paying an interest rate when that's a low interest rate that is seeing the value of money go down, right? Nobody. So you saw the significant weakening in bond auctions today, at today's auction. And oil prices are up. And the dynamics seem to be in line for oil prices to continue to go up. OPEC isn't putting any supply on. We've seen significant demand rise up until this point. Let me sit down right here. And we can expect that demand to continue to rise because the United States is leading the rest of the world by 6 months. So for the next 6 months, that's going to pick up. And we're just about reaching again at that 6-year high in oil. So considering the Delta variant is still spreading a little bit, Europe is particularly lagging, we can expect that over the next couple months, demand's going to return and grow stronger, and that's going to continue to push the price of oil up. Couple that with significant money printing, money supply increases, although down from where they were, still pretty significant. Fed hasn't taken its foot off the gas at all. We can expect the runway for oil prices to be quite significant. Supply dynamics are there, demand dynamics are there, and money supply situation is definitely there. So at least for the foreseeable future, that's going to happen. Yes, and this is considering EVs, this is considering everything. Expect the price of oil to continue to go up. And for that's prices more broadly, got the money supply, seeing the bond weakness, seeing the inflation data, seeing the supply and demand dynamics for oil. Now, the price of oil for the past month or so has not correlated as much to the price of oil stocks as it typically does. If you look at today, the price of oil is up significantly, yet oil stocks are not up as significantly. This should reverse, and it's probably going to start reversing meaningfully, meaning that the stocks are going to play the catch-up game once oil companies report earnings, and we can actually hear directly from them how much money they are printing. Not printing off a press, but printing in terms of production of their goods, which are at 6-year highs. The stocks aren't, so we'll see what happens with that. We'll remain long. We're holding these positions. This is a relationship. This isn't like a date. This is a relationship that we have with these companies. We see their flaws. We see that the market isn't treating them right, and we're going to stick with it because it's the right position to have. At least I believe. So we'll see what happens. Can't flip the camera, but just because I'm here, got to do the OG Trump Tower feature. OG Trump Tower. So that's the deal for today. We're sticking with oil. We're sticking with the trade. Interest rates are rising as we expected. Inflation is occurring. So we'll see what happens. And until next time, peace out.